The stock market sell-off on Friday really challenges the status quo of this market. And in today's Sunday video, which is going to be longer than usual, I'm going to be doing a bit of a jumbo setups video, which, by the way, if you appreciate these videos, make sure to hit the thumbs up button as we get started. In this video, I'm going to be discussing what is going on and whether or not this is the potential start of something bigger to the downside for markets, as we saw a bit of a character shift in this kind of sell-off that we saw. Now, if we think about the status quo of markets, we've kind of seen this broad risk-on rally for the last several months and even years. Since 2022, we had the inflation scare, and things have really bottomed out for markets. But the question is 2025, that is, going to be a year where that easy uptrend in stocks does get challenged? Well, it seems to be that case so far. If we take a look at this year, we've had a really choppy back and forth market, and the NASDAQ was down 2% on Friday. Now, 2%, does this put us into territory of, the whole market is going to crash? Well, you can see this market is still very well supported, and I don't think we really did too much structural price action damage with the sell-off on Friday. That being said, it is characteristic of a potential topping formation that I want to discuss in this video and also share my views on a little bit of everything. We'll be taking a look at indices, commodities, cryptocurrencies, currencies, and also yields. I'm going to try and do a little bit of everything, like I said, so I hope you're okay with a little bit longer of a video than usual. So starting out, I really think it's important that we just take a second to look at the U.S. economic heat map. I have been really beating a dead horse with this one, and if you're not familiar with that saying, basically it just means you're repeating yourself over and over. I've been saying a lot on the channel that the U.S. economic heat map has gone blue to red. And if we know our economic heat map, blue to red just means market sentiment goes from a little bit more risk on, things look good, to risk off, things look a little bit more troublesome. Now, I do want to be clear, and I've said this as well many times, so I apologize if you hear me repeating myself in some of my videos, but repetition is important in trading, especially when you're trying to understand the macro. We do still have good growth in the United States. 2.3% GDP is good, but it's not as good as the forecast at 2.7. Services PMI at 52.8 is good, but it's not as good as forecasts were for 54.2. Retail sales is actually showing some material weakness. And then inflation is still up at 3%. Years later, inflation is not at that 2% target. Now, don't hear me incorrectly. I'm not saying that I think the stock market is on the brink of a disaster and that the whole market's going to crash. But with tariff concerns and economic data coming in pretty soft here recently relative to the forecasted values, not necessarily soft as in we're entering a recession vibe, but more data's coming in a little soft compared to what people were hoping for on the analyst community. That's why this is showing up red. And if you know your heat map, you know that that just means, okay, the market was looking for something and it got a little shortchanged on that. And I think that in combination with some of the PMIs and sentiment data that we saw on Friday has the stock market a little wobbly. But you have to think, guys, the stock market, if we're taking a look at the S&P 500, is at the same level that it was early in November. In fact, it's given back a lot of the gains here, all the chop that we've been making. It's been a whole lot of sideways action. And I don't want to jump ahead too far here, but when we look at something like gold, which is making really nice gains, or when you even look at, foreign stock markets, you're seeing gains in other places. Meanwhile, the S&P 500 remains pretty range bound, and I'm just not super attracted to it at this point. If you've been watching my videos, as we reached this high, I pointed out that I personally don't have a huge positioning in the U.S. stock market at this time, and that while I'm not short the market, I'm certainly not, putting to work a ton of capital at this time in this market. I do think that there are probably lower prices and better deals that could come. Doesn't mean it has to happen, and I'm not short the market. So I do want to clarify, I'm not here saying, oh, it's a disaster, but I just think that, the market is priced for perfection, and Friday we got a little taste of that. Friday we got a little bit of a sobering reality, and then we saw the market, take out some of these lows. Let's talk price action for a second. So we had a top here, and price kind of took out this upward trend line here. We could actually draw in just a little bit of a trend line effect here. Nothing super particular, but big drop on Friday. And the way we closed was interesting. This market has been really resilient where every single dip seems to be being bought. Look at all these moments where the market was down in the morning and then ripped back towards the high of day several days in a row. Well, you've got the Friday close, the first time in a while where we had a decidedly down day and it actually stayed there, right? So does that mean it has to keep going down? No, but it is a good start. You see, for example, these days where we just got the big reversal, but oftentimes when you do get a larger market sell-off, this is indicative of what that kind of looks like. You start seeing candles closing towards the low of their range, right? Although I'm primarily a fundamental analyst, I do still use technicals, and I want to be looking at the way candles are closing to give me an idea of how price action through the day falls. What we see here on the daily chart is a decidedly red day on what is a decidedly upward weekly chart trend. And that's where I want to get to. You can't get too bearish too quick here. This market is really strong. When we look at the NAS, when we look at the S&P, these charts look very, very good on the weekly chart. The upward trends are still intact, but you are seeing a little bit of correction. So I think it's prudent to say that was a good sell-off on the day, but bears have a lot more work ahead of them before we can call this market bearish. I think you really have to see on the S&P 500 a breaking close underneath this 5850 to really start marking out, okay, bears have control of this market. And I just think that if you're trying to play the bear game here, I would skip that. You guys hear me, I'm cautious on this market. What have I been doing instead? Well, I've been cash heavy for stock positioning, and I've been long things like silver. Now, this is not working perfectly, and an update quickly on my silver positioning. It is possible that I do get trailed out for a profit here on this position. More on that in just a second. Let's not skip the rest of our indices here. The NASDAQ coming down here pretty heavy. And I want to take a look really quick at sentiment here. So if I go over to my Commitment of Traders data page here, I just want to see what kind of went on in this past week. And you can kind of see where I'm going with this. The institutional, let me actually back up, make sure I explain. I forget sometimes there are new people who are watching my videos. What we're looking at right now is the Commitment of Traders data. And this shows us institutional money flows. It shows us where big money is parked long or short. It also shows us, if we take a look at this section down here, the net kind of weekly buys and sells. Now, this is this latest week's changes, and I call this the latest COT buys and sells section. We can see which assets institutional money is buying versus which assets institutional money is selling. So this is your net positioning, and I like to highlight this as more of a long-term indicator of their positioning because it does change week to week, but it doesn't really change very much up here. It changes very slowly on the net positioning channel. But if you're more active, if you're more a swing trader or a day trader, I like to look at this section down here. The latest COT buys and sells section of this page will show us what institutional money really went shopping for or sold out of heavily. And our top buys here are going to be the Australian dollar, the South African rand, the US dollar, the Swiss franc, the Canadian dollar, the euro, the yen. These things were kind of net buys. Let's take a look at what we saw. Oh, also silver gets thrown in there. I got to mention my silver. Let's take a look at what they actually sold. Interestingly, they sold some gold. They actually closed long contracts. You can see this is number of long contracts. We have all of this denominated at the top of your screen here. Feel free to pause if you need to better understand this. But what we can see here is that they closed out longs. They added shorts for gold. We can see that for the S&P 500 specifically, big close of long contracts. That's pretty bearish. They also added short contracts, also pretty bearish. Very interesting bearish kind of week for SPX. What about NASDAQ? Well, NASDAQ, they added some longs, but they added more shorts. And proportionally, they've been kind of slightly tilted long, but added a lot here this week to their short position. So I would call that kind of a net bearish week. The Dow Jones, my goodness, guys, look at this. Big sells coming in here. Added a whole bunch of short contracts and added just a modest amount of long contracts. So I would say this is a pretty decidedly bearish week for U.S. indices, at least in terms of institutional money flows. And again, this is why we track this, is we want to keep up to date with what is happening on the smart money side of things each week. Now, of course, you can also take a look at the historical section within the Edge Finder if you're an Edge Finder user. And by the way, if you're not an Edge Finder user, I'll leave a link in the description down below to where you can pick up a copy of our team's software. A1 Trading, my company, builds tools for traders, and we specialize in sentiment and positioning tools, as well as economic data to help traders with their sentiment trading tools, as well as trying to understand the fundamental analysis side of trading, where a lot of traders kind of ignore that side because it seems a little too hard or hard to approach. We build tools to bridge that gap and allow traders to use the same tools that institutional money itself, big hedge funds, the Federal Reserve, this is data and stuff that they're looking at. So that's why we build it and offer it to the retail trading community, and that's why we have kind of the business that we do. So if you'd like to check out our tools, like I said, the link is in the description down below. So I'm taking a look at the COT data history. You can see, of course, within this tool, you can select whatever you want on your own time. If you have a copy, go through gold, yen, NASDAQ, whatever you want to look at if you want to try and get an idea. But still some pretty stubborn bullishness in the US dollar, which I do find to be interesting. But let's move along from this because I want to get back to kind of some charting here for the indices. So big sell-off on NASDAQ. I mean, NASDAQ was pretty beat up on Friday, but maybe not as beat up as this Russell trade or this Russell idea here. And this is painful, guys. The Russell has been struggling for some time, but sentiment about kind of inflation stickiness, but growth metrics starting to come in soft has the Russell back in a funk here. We're back to levels. I mean, this has been painful for people who have been invested in the Russell. You've seen no gains going all the way back to January of 2021. Meanwhile, the rest of the stock market, right, the S&P 500, the NASDAQ, they're well above all time, or those levels that were seen back in February 2021 or et cetera. But yeah, this is a tough trade. It doesn't mean that the Russell is, not going to have good performance in the future, but right now it just can't get out of its own way. We've been choppy, then we get a little bit of a burst, and then we just come crashing back down. Gravity has a strong hold on this one. And my opinion here, if you're looking at the Russell, this is just not right now the right play to be in. This is my personal opinion, of course. But we have sticky inflation and growth metrics coming in soft. Again, I always like to reference the economic heat map when I talk macro because I think it helps to visualize what we're talking about. Inflation data is coming in hot. And at the same time, you have growth that's just missing forecasts. Jobs data, which is, relatively strong, but with high inflation and missing economic prints, the problem here is that the Russell really needs Goldilocks. And what I mean by Goldilocks is when you have a situation in which inflation is falling and growth is very resilient. Now, we do have pretty good growth, but it's missing expectations here recently. So we wouldn't call this a perfect Goldilocks scenario anymore. In fact, we have inflation on the rise. So if we were to give this a proper kind of by this four-pronged definition, we'd call our current scenario at risk of tilting more towards a stagflation environment. Now, the U.S. has it better off than other places, notably like the UK and Europe, where I think stagflation is a more serious concern, where they have, really slow growth. We can, of course, click over to the UK economic heat map. You can see growth at just 0.4% compared to Europe, 0.1%. So the U.S. definitely doesn't have the same caliber of issue, but you have to remember the U.S. economy is kind of centric to the global stage. And so with actual data coming in weaker than forecasted, if we're losing the leader, what happens to the rest of the crowd? So again, I want to make sure that everybody's on the same page with the U.S. economic heat map. This is what is driving the trends that we're seeing right now. The stock market sell-off was so rough here on Friday because I think you're sitting in a situation where you've got tariffs, you've got growth concerns, you've got inflation concerns. It's a little tougher of an environment, I think, than 23 and 24. Doesn't mean we are, doomed for failure because, I still think that AI plays a strong role in potentially, building out massive growth for companies in the future. I just struggle with the valuation and with the current headwinds. I personally like other things a little bit more. Now, we can talk also about German stocks and Chinese stocks. Chinese stocks really having a breakout here recently. I did talk a little bit about this in my video on Saturday, but just to give a quick view, I actually like for 2025 a lot of these other stock markets quite a bit, with US stocks being priced very high in terms of valuation. Chinese stocks, which have been under pressure for multiple years, take a look at, if we scroll out on this chart, you can see they've not had great performance. I think that we're starting to see a rotation into foreign and abroad stocks, and this has been a trend that has been dead for a long time. The trend has gone the other way, right? Everybody buys US stocks and ignores everybody else. Possibility that some of these other countries may be due for some stronger performance in 2025. And maybe this is the rotation of that kind of 10-year, 15-year period where US stocks just completely dominated. I'm not saying I don't like US stocks, I certainly do, but I do think that there's potential for some of these other areas to get more attractive, especially like the DAX and the FXI, right? The Chinese stock market. I am looking at some pullbacks here. We have German elections on Sunday, so we'll see how the German DAX kind of opens up here in the new week. But I am looking for possible pullbacks in that area. Let's see if we take a look at the top setups algorithm. We're going to get quickly into gold and silver, and I'm excited to talk about that. The DAX is also not coincidentally a bullish reading on the Edge Finder. That's why I brought it up. It's something that's on my watch list. Pound pair is also getting some upbeat readings here, which I think is interesting. Currencies will come later in the video. I do want to just ask a quick reminder, if you have not already, hit the thumbs up button. And I had somebody comment on one of my videos here recently. They said, Nick, I've watched you for a year and I wasn't subscribed. So if you could do me just a quick solid favor, make sure to subscribe to the video or to the channel if you have not already. I really appreciate the support. So let's get into it. Gold and silver, of course, a very popular topic on the channel. Everybody loves gold. Everybody loves, well, silver doesn't get the same amount of love, but gold is a fan favorite, and it makes sense. It's a pretty emotional asset. People flock to gold in times of fear, and I do think that that is part of the reason gold is doing quite well. I don't think it's coincidental that stocks are flat and gold is having a really good performance this year so far. I mean, year to date, we're looking at almost double digits, I think. We actually might be into the double digits. Let me just do a quick check. Yeah, gold is 12.72%. That's not bad at all. So we're in double digit territory already for gains for gold this year. Metals have been a theme that I've been very bullish on the channel. And coincidentally, it's not from my gut feeling, it's from my system. The Edge Finder is a systematic way to approach the markets. It's why it's so popular. It's why we have traders all over the world using it. It uses an algorithm that takes the human effect of like, oh yeah, I think I want to buy gold right now, or like, oh yeah, I think now. Of course, the Edge Finder is not financial advice. It's not here to tell you, oh, right now you buy gold, right now you sell silver, right? It's not like that. It's a filter that basically looks at a lot of economic data and it scans stuff for me so that I can go take a closer look. And I looked at gold and silver, and I looked at the scores that the Edge Finder's giving me, and I looked at the data, the heat map that we just discussed, and I like the story here. Again, it doesn't mean the price can't pull back here in the short term, but I do think that the longer term kind of trend here is still very intact, that things look really good. Here's a weekly chart. Is this thing a little bit overbought? Probably. But does that mean it has to reverse right away? No. It actually can get way more overbought. We could see, guys, and I'm not saying that, you should believe this is going to happen, but I'm saying do not be completely shocked if gold goes straight to 3,000 and above without pulling back. People believe that, markets have to move in waves, and that is a fair point. They don't move forever in one direction. But you don't want to be the fool who believes markets can't possibly keep going higher, and then they do. There's so many expressions of traders loving to say things like, what goes up must come down. Yes, you're right. Eventually, if you keep saying the market's going to pull back, the market's going to pull back, the market's going to pull back, or if you're saying about the stock market, a famous one is bears love to say, it's going to crash, it's going to crash, going to crash, going to crash. If you keep saying it, eventually you will be right. But how many losses are you going to rack up in the meantime trying to be right and trying to call the top? For me with gold, the answer is pretty clear. we have a very good fundamental reason for the recent move in gold. If you've been watching my videos, you know I have been persistently bullish on these things and riding the momentum here. And when we talk about gold, yes, it's a little bit stretched here, but I don't want to kind of encourage people like, oh, we got to get short. We don't want to miss the big bearish trend that's going to come. Sure, it could happen. But what if you just get one of these and we just rip to new highs again? That's what happened this past week. That's what happened this candle here. It, fakes the bears out who get so excited when you start to get a little bit of sell pressure. And then bulls have been, running right in to buy the dip. There's a lot of stuff here. The macro looks really good. There's also China buying heavy amounts of gold, their central bank doing so. And there's also the concern recently about Trump and Elon Musk actually wanting to do a Fort Knox audit. So there's concerns on the gold front. I put out a video. It's actually doing pretty well on my channel. I would encourage you to go check it out. The Fort Knox gold video that I did recently. Go find that if you want to watch that topic in more detail. But, gold is one that if I'm looking at this, the story here is bullish for 2025. Does not mean you're not going to have pullbacks in between. And it doesn't guarantee that we go to 4,000 an ounce this year. That's not what I'm saying. What I'm saying is that, in my opinion, current outlook for gold is bullish. And that means that I'm a buyer of dips until the dips no longer are dips and they're full-blown reversals. There's always the point where you have to say, oh, okay, truly the trend has changed. But I'm a trend follower. The trend is up. We don't call tops on this channel. We look for continuation plays as long as the fundamentals support the narrative, right? So I like silver. I like gold. You guys saw me talk about it briefly earlier, but I am still long silver. Tentatively, we'll see how the Sunday market opens up. If we do get kind of a sell-off further in silver, I'm going to be taking my profits on this position. I would obviously like this thing to continue. If it wants to bounce at support here and keep going, excellent. But if it doesn't, and we get a larger scale pullback in silver and or gold, I'd be a buyer of bigger dips. So I have no problem taking profits on silver. And if this thing does come back to my entry and the setup is still there on a fundamental basis, I may re-enter. So, of course, I'll keep an eye on that. By the way, if I take any trades on silver or gold, we do have a signal service that is available in the description down below. You can get notified anytime I take a new position, every time I trail my stop, every time I make an adjustment to my kind of my trade, my stop loss, etc. You can get notified if that's something that you're interested in. There's a link in the description down below. I maintain on my channel a level of transparency that I'm proud of and that I think is very important in the trading space. I show you guys my live brokerage accounts all the time for kind of the purpose of being as transparent and real about this stuff as I can. I'm not always right, and I don't claim to always be right, and I don't claim that this stuff is easy. This stuff is ridiculously hard. But I do share my real trades, my real live P&L, quite often on the channel. So if you would like to check out the trades that I'm taking, you can get notified anytime I take one inside of our VIP signals room, linked in the description down below. So like I said, stop's been trailed. If we can't hold these lows that we kind of put in on Friday, that was a pretty bearish red day for silver. From a price action perspective, like I said, metals may have room to pull back, but the bigger theme is still up in my opinion. So if we get a closure here, if we break those lows, I'll stop out and look for a chance to re-enter perhaps on Monday if I can find the right, if we get, a larger pullback here and I can get the right entry. I'm watching it close. I do like silver, like I said, quite a bit. I also like gold. So for the metals, I remain bullish going into the week. I do also want to just talk a little bit about market sentiment here for just a second more. We did see for quite a while stock market participants really bullish. The put to call ratio getting to these extreme levels, by the way, what this means, the put to call ratio is just looking at puts versus calls, the volume in the options market. When everybody's bullish, what do? They buy a lot of calls on the market. When everybody's bearish, what do? They buy a lot of puts on the market. Well, we've recently seen people go from incredibly bullish to now starting to flip back the other direction. We also see that made evident by the VIX, right? The VIX kind of spiking there on Friday, confirming this idea that the market is a little scared, right? So it went from really not scared, these low-level prints on the VIX just tell you that the market doesn't see a lot of volatility coming, to all of a sudden jumping up to 18. think that has actually some room to get higher, to head up to, a 20 handle or beyond. It would certainly feel like this market has enough reason to price the VIX up around the 20s. We'll see if it does. I do think that, if that happens, you may get larger pullbacks in the market. You might see NASDAQ down a little bit further. I think it has room. Like I said, we've already skipped our indices or moved past them, but I do think that a VIX means gold also kind of continues to hold a premium as this market seems to be reacting to a number of geopolitical things as well. In terms of other top setups currently on the Edge Finder, what we can see is a lot of pound currency pairs. We haven't gotten to currencies yet, but on the bearish side, we've got some yen crosses as well, and a whole lot of stuff kind of sitting in the neutral camp. But I do want to kind of flag that foreign stocks are actually looking interesting, and if we do get a larger dip across the globe in equities, I actually think I might step back in personally towards these before I step back into US equities, which kind of sounds crazy. And I've not been in that camp for a long time. I've not been interested in foreign stocks over US in a very long time. But I think the juice of this for the squeeze, if you will, could actually be more interesting in some of the foreign stock markets that I watch. So we'll see. Copper had a little bit of a down day on Friday. We also had natural gas pop here this past week. Oil, big down day. Look at this, guys, 3.26% to the downside and threatening to break through these lows. I mean, this is interesting. You got to start asking the question, what's going on with oil? Why is oil down so much? And does it have any combination with the 10-year dropping? We'll talk about that in just a second. I don't want to get too far ahead of myself. But oil threatening these lows, of course, is good on the inflation front. Lower oil prices could lead to other prices coming down as well. But could it also be a growth concern? You always have to ask the question, when oil sells off a whole lot, is it because global economic outlook is starting to look a little bit more bleak? We can't rule that out. And I do think that has a lot of combination with what we just talked about with yields. You got to pay attention to the macro. This stuff is really, really important. I also want to just take a quick moment just to remind everybody, this is a quick plug. If you are interested in trading with a brokerage outside of the United States and you'd like to trade directly on TradingView, there's several linked in the description down below. I do want to mention and kind of point out that Vantage Markets, one of the ones that's in the description, does offer a generous welcome bonus. And if you're in the United States looking to trade Forex, or if you're looking to trade stocks, options, ETFs, I get that question all the time. Which brokers do you use? All of the stuff that I use is linked in the description down below. You can check it out there. I would encourage you to do so. See which ones are right for you. But I've got several regulated brokerages linked in the description. A very common question I get on my channel is, what do I trade with if I'm in this country, or what do I do on this country? I also want to put you on, if the description you find it, you can't get enough information about brokers to check out, I want to really put you on to something that we've been working on. a1trading.com/brokers. Check this out and skip this part of the video if you'd like. It's totally fine. But for people who are interested in brokers, don't skip this part because this is really important. Signing up with the right brokerage can make a huge difference in your trading. You can get welcome bonuses, and we put together a page to help out traders who are in places like the US, UK, Australia, Canada, and the rest of the world. You can actually select your country, and there's a couple brokerages that are linked there, and we actually have bonuses available with several of the brokers. So as an influencer in the trading space, I don't love that term, but I'm a content creator in the trading space. I have a lot of, kind of pull with a lot of different brokerages that I've had the fortune to work with. And I've negotiated welcome bonuses and things for my audience. So if you're interested, check out a1trading.com/brokers, and you can get some great free stuff when you sign up with brokerages using the links that are on our website. So that's fully transparent. You'll also be helping out my channel, and I really appreciate that if you choose to use those links. But again, like I said, we've brokered out, if you will, with the brokers, some special sign-up perks for my audience here. Okay, next up, we're going to talk about the dollar. So check it out. Dollar index, really materially weak, guys. This is really interesting to me. The dollar index had a really tough time this past week. And again, on Friday we had a little bit of a perk up here in dollar strength, but it really wasn't anything super impressive. And on the week, we had a really bearish week for the dollar index, really bearish. On the month, we've had a bearish kind of experience here for the US dollar. What's going on with dollar strength? And this is something when it comes to currencies that you have to be aware of. Currencies are, as I refer to on the channel, an unbound market. Gold and stocks, they typically over the long term do something like this. Picture this is like weekly bars. You do get the big crashes, but you also just kind of get this gradual long-term tendency to the upside. Currencies, not so much. With currencies, when you're talking about the US dollar, this thing can go up, down, sideways. It really has no bearing. Some people love this because if you're a mean reversion type trader, over the very long term, pretty much sell rips and buy dips in currencies. That's at least the theory. But here's the thing with the dollar index. You'll see if you watch on my channel that I have no long, super, super long-term bull case or bear case for the dollar. I am pretty go with the flow. And specifically when I say flow, I'm talking about economic data. We go back to this page. There's something here that's changed. If you're a regular, like I mentioned at the top of the video, this was all blue for a while. Inflation was, kind of sticky here, but we had all the growth metrics flagging strength. But now we see something changing in this story. You do still have sticky inflation, but you're losing the growth story. And that is the problem for the dollar index, in my opinion. There's not this unbeatable U.S. economic, force. Now we're starting to see something flip, and momentum is kind of favoring the bears now. I actually think that rallies in the dollar are more likely to get sold into than for us to have some huge push back to the highs. My personal opinion, and I could be wrong about this, but I do have a, kind of actually a preference here over the US dollar or trading US currency pairs. I've been talking about this here a little bit recently on the channel, but I have a position specifically on TLT, which benefits from many of the same things that hurt the US dollar to the downside. Let me show you what I mean. Let's take a look at the 10-year yield. I briefly mentioned this earlier about when we were discussing oil on this video. We talked about the idea that what if you're getting yields and oil lower because of growth concerns? I mean, that's the story, right? That's what's concerning the market is, why isn't the 10-year up so much if inflation is up? It's because growth metrics are concerning for the dollar and for the 10-year. Now, growth metrics are not necessarily in a dire strait, but we're going from super hot growth to good growth. And that is the market repricing. So I've been bullish TLT here for a while, and this has not been an exceptional trade. So I don't want to play this. I'm very slightly positive on the position, but I do think that there actually is room for this to continue higher. I think TLT, which benefits from falling yields, right? Bond prices go up when yields go down and vice versa. Bond prices go down when yields go up. That's just the way bonds work. Higher yielding bonds, right? If we take a look at a bond, right? If a bond has higher yields, like how much percentage you get, then the price of the existing bonds goes down, because why would I buy an old bond at lower yields when I could buy a new bond at higher yields, and vice versa? If we get the value of or the yield on bonds going down, then the existing bonds actually start to look more attractive. So that's the way bonds work. And I like to trade them. I know, they're not a very exciting market to talk about. Everybody wants to talk about gold and the NASDAQ. I get it. But when we talk about, macro, I like trading bonds quite a bit. I'm long TLT. I think that this has potential to continue higher. It also has another theme that I've been talking about on the channel tied to it, the Japanese yen, which we'll get into in just a second. But yields seem to be dropping. We seem to have put in a high here. And actually on the year, bond yields are lower, right? So yields, despite all the scares about, Trump tariff's going to cause a ton of inflation. I've been trying to say this over and over on the channel. Tariffs are less. I mean, yes, they are sort of short-term inflationary, but bigger term, the bigger question and concern should actually be growth. Because if tariffs disrupt the state of the global economy to the point that we see slowdown, growth is your real problem. Because if growth slows down, yeah, inflation probably should go down too. But if growth starts to get hurt, that's the issue. right? So, that's my thing here is TLT is going up on that growth. I've mentioned I'm cautious on stocks. I'm bullish on metals. I'm bullish on TLT. You could kind of put me in the camp of looking pretty risk off right now. Look, I'm long metals, TLT, and yen. You couldn't get more kind of a risk off basket than that. So right now, I'm cautious on this market. Doesn't mean like I said, I've said 10,000 times on my channel, I'm not here shorting the market. I don't usually do that. I don't usually short stocks, but I do have, kind of a rotation into things that are more risk adverse. So I am long the Japanese yen. Specifically, I'm short things like CHF, JPY. And I want to show you another heat map that is really important to me, which is Japan's. So if we take a look at the Japanese economic heat map, which is available in your Edge Finder if you have a copy, just go to JPN economic heat map. We've just added several economic heat maps, and we've already had a bunch of people asking for new ones. So we've got more coming. That is almost a certainty. You will have eventually with the Edge Finder. My goal is eventually to have you, if you have the Edge Finder, you're just going to keep it open on your screen 24/7. That's what I do, and I hope that that contagion takes over the whole trading space. I know I'm a big, bad, greedy salesman, but honestly, genuinely, it's a great tool for traders who are trying to understand the macro, and I genuinely would buy this product every single day of the week. If I wasn't the one selling it, I would still be a buyer, and that's how I know, when it comes to selling something, people sometimes are like, Nick, you're just a salesman. You sell software. And you're like, and I'm like, absolutely. That is my day job. I sell software. I build software. I run a company that specializes in something that I'm passionate about, which is markets, but specifically bringing more light to the fundamental analysis side of things that so many traders lack. I'm very passionate about that subject and building the right tools for traders to use. If you get it, you get it. If you're a naysayer about fundamentals, you don't get it or you don't like them, I totally respect that. This may not be the channel for you, to be completely honest. We are very much about the macro here, not ignoring data and not just calling things red folder news. Oh my gosh, that gets under my skin when people just say, oh, I watch out for news. I watch out for red folders. It's like, okay, you're just like ignoring the entire thing that moves the markets, right? Macro, fundamentals, data, FOMC, Jerome Powell comments, those are what move the market. So I feel like if you are going to trade the markets, my opinion on the matter is you should have a good understanding of fundamentals. Even if you don't necessarily make your trading executions based on them, you should be aware of what's going on and understand how the markets drive up or down based on the macro. So when we look at the Japanese yen, which I've recently been bullish on, it's because of this, right? We're seeing GDP growth uptick compared to forecasts in Japan. We also have services PMI coming in much better than expected. Retail sales strong. Inflation is actually rising, which is bullish for the currency because now they have growth metrics. They can back the idea of actually hiking rates. So the Bank of Japan wants to hike rates. You've got employment looking very stable there. I like the story for the Bank of Japan to potentially hike rates. And it's about time that the Japanese yen, which I believe long term is a little bit oversold. Now, of course, if you're looking at this chart, you might say, don't you mean overbought? No, I mean oversold, right? The yen, I think, has room to strengthen, which would mean other currencies would move lower, right, compared to the yen. So I do like the story here for a bigger theme to the downside for the Japanese yen crosses, but bullishness for the Japanese yen. So this is a theme I really like. I'm watching the Japanese yen crosses. If we look at things like euro, I can't really give you a really strong, decisive opinion on this. I would say I lean bearish just because, well, actually, I can't even say that. I can't really say that I lean anything on the euro unless I get a reading. I mean, I don't have a strong enough reading. We have, let's actually just look at our major currency pairs here as we dive into currencies. Let's go to major currency pairs. You've got one bullish, which is pound dollar. I kind of inspect what's going on with the pound pairs. Why are they getting strong readings? And then dollar yen is a pretty clear idea. Bearish for dollar yen, bullish for yen, right? Specifically. I really like the story for Japanese yen. And we'll see if that plays out correct. If it doesn't, if something changes, we adapt. On this channel, there's no ego here of oh, I know I'm going to be right with the Japanese yen. None of that, right? I think the yen has room to the upside, meaning a lot of these crosses I think can go lower, but I don't know that, and I don't put my whole account on the line with that thinking. That's very important. We manage risk around here. We're not egotistical. We change our mind when the market data changes. and we don't hold on to ideas and defend them with our entire account, right? That's dangerous stuff when you're trading. You have to be nimble. You have to be willing to admit if something goes wrong. But right now, I've shared with you pretty much everything that I'm feeling most convicted about in the markets. I do want to just remind you, if you are interested in getting our software, check it out in the description down below. I've got discount promo codes for you there. And if you're looking for a better brokerage, it might be worth your time to check out the links in the description down below to make sure you get some sort of welcome bonus with your deposit. Thank you very much for watching. Have a great week ahead.